So my next guest on the show today is someone who can easily digest 15, 20, sometimes 50% decline in stocks, because he believes in a philosophy of buying cheap and holding stocks for a long period of time. That is Sanjay Dutt. He makes a comeback after a period of lull. Sanjay, welcome back. Thank you for joining us. Let's start with a big smile on your face. Last time when we met, the world was bearish, you were bullish. You got it right. Now that the world is bullish, are you getting bearish?
Nikunj, I'm not getting bearish, but we must keep in mind that, on a broader macro basis, on the economy basis, we aren't really out of the woods, because there are a lot of macro headwinds in India at present. But what we are seeing right now is kind of an oversold rally, and more than oversold rally, we are part of the emerging market, basket, where we've lagged for quite some time in the last few months. And now we're doing the catch-up act, so that's why we are seeing flows coming in. So from now on, it's all going to be a function of earnings and flows. So earnings being specific companies, and flows, obviously, if emerging market flows carry on, markets would seek higher levels. And more than the Nifty or market seeking higher levels, as we're already seeing that, a lot of stock-specific opportunities buying would come in, and that's already happening. So it'll probably carry on. But the key issue is that on a economy basis, I think we've still got a problem. Things like, private sector capex hasn't picked up as yet. Inflation, of course, is benign, but at the same time, I think, let's face the fact, we may not have a 7% GDP growth rate. It's probably closer to 6.5%, according to me, if one does a proper calculation. So, everything is not gung-ho, but what we are seeing right now is kind of an oversold and a underinvested kind of a situation where people are coming in to buy.
Go from here, like you rightly said, that right now everything is at the peak of good news. One assumption that we will get a favorable market-friendly political verdict. Second, interest rates will not move higher. Third, flows into emerging markets will only increase. My problem with the assumption is that right now the news cannot improve dramatically. And if at all news goes down, then what happens to the market?
Yeah, a very good, valid point, and obviously it kind of links to my hypothesis at this point of time that Nifty would really fall off substantially if we have some real political shocks coming in. So I easily see a 10% kind of a fall in Nifty, in case we see the government being something that we all don't expect, the markets are kind of pricing in right now. And that's going to be quite drastic, because, if you look at even the Nifty rally is very concentrated. It's a bunch of 7, 8, 10 stocks. And if you look at those stocks, and if those stocks easily have, they're stocks which are at a very stretched valuations at this point of time, like an HDFC Bank or a Kotak Bank, and all those are trading at phenomenal, price to book, phenomenal earnings that you're factoring in them. They will really come off huge, and people won't know how to really get to the exit door if any negative news flow comes in. So in my opinion, if you do want to deploy, and you should be deploying cash at this point of time, you should be looking at good quality mid caps, good quality small caps. I think there's safety there. Yes, they will fall if the Nifty falls, but I think the ability to handle those, kind of corrections is much easier in the longer term than seeing an HDFC Bank correcting 10-15%, and then you don't know where to hide and what to do, whether to sell it or whether to hold on. So those kind of areas, I think one needs to be very cautious of, in case all the positives that are priced in don't kind of fall in place in the next 3-6 months.
Sanjay, hi, morning. The big news this morning, and one of the top trends on Twitter still is Mukesh Ambani, now that he's rescued younger brother and saved him from going to a jail for non-payment to Ericsson. But, that aside, do you find merit in any of the ADAG group businesses? They're dirt cheap right now. A Reliance Power, a Reliance Capital. Is there any merit in looking or going through these names?
I think out of the group's entire, basket of stocks, I'm positively inclined to Reliance Capital. I have a position in there, so I would obviously like to disclose. I think there's phenomenal value in there, and to my understanding, the next generation is coming in there, and the focus for the next generation lies in that business at this point of time, and that is one business which even Mr. Anil Ambani has been himself very savvy at, right from his early days when he was part of the integrated group. So to my mind, that's one place to be, but obviously volatility is your friend out there. So on days we saw it 194, 195 or 190 odd about a week, 10 days back, and suddenly we saw it at 162. So on a very bad day, that stock could definitely be bought. And within the group, there's a very small company where again I have a position, is Reliance Home Finance. I think it has a phenomenal franchise, a good business on ground, but because of the negativity surrounding the group, it's trading at a pittance at this point of time. So I think these two are the best bets in the group. And if you are a high risk player and you want to make good returns, these two could be bet on for the next 2 years, I think.
Sanjay, hi there, morning. There's quite a bit of growing pessimism when it comes to the auto space as a whole. Maruti yesterday as well acknowledging the slowdown, talking about production cuts. Are you finding selective names that look appealing here?
No, not as yet. I think the pessimism is justified, and the pessimism, most of the pessimism is also already in the price right now. But I think there might just be one last sell-off where we see some of the stocks just falling off the cliff 5, 10 or 20% in a few sessions. That may just remain when some of the one or two of the big boys who hold large holdings might just decide to throw in the towel. But even after that, I think something happening in the very near future. One expecting that Maruti will suddenly bounce back 20-30% in the next 2-3 months. I have my doubts because this kind of numbers, what we've seen month on month, quarter on quarter volumes, have kind of plateaued out. And like I've been saying for quite some time, the industry is also having some kind of structural shifts or product life cycle issues, whether we are moving towards EVs, whether we are moving towards new technologies. So some of those issues are also bothering the industry. And obviously, what people are questioning the entire concept of owning high-end cars when you're talking about shared rides of Uber and Ola. And we've seen this trend in the West, and I don't see any reason why this trend will not fall in place here. And obviously, improving urban transportation, whether it's metros, etc. You cannot see the kind of numbers that you've seen in the Maruti and the M&Ms over the last 2-3 years. These companies will have to reposition their models. Obviously, this is like what I'm talking as some of it is blue sky also, and kind of more structural issues. So I wouldn't really want to be overweight these stocks at this point of time. No, that's cutting a long story short.
Sanjay, sitting in Delhi, what are the feelers that you're getting about the upcoming elections? Is NDA coming back to power, and is that an assumption that the market is also working with? Because some believe that one of the factors riding behind the March rally is that assumption.
Yeah, Aisha, that's exactly what I said just now. Market is going by the assumption that Prime Minister Modi would lead the next government. If that doesn't come through, I think market's in for a huge sell-off, and that'll be a very rapid sell-off lasting 2-3 days, and kind of, everyone who's been long will lose his shirt. So that's the mood in Delhi also. People believe that, they will get the numbers in place. NDA would be back in power, and that's the assumption that's there in the prices, in my opinion, as far as the markets are concerned. And if for some reason doesn't come through, I think it's more dramatic if the other outcome comes in, is because if you look at the other side, it's going to be a ragtag coalition coming together. You and I don't have the answer who likely is going to be the Prime Minister or what's going to be the shape of the government like. So that's the kind of uncertainty which market would really panic about if the election outcome is not the way it's kind of factored in right now. And that period of, week, 10, 15 days or maybe more, when all this falls in place, is the period where actually you will get some real buying opportunities. But if you're long and then, you're stuck in that period, I think God save me, because I'm also long, so God save all of us who are invested, because that's going to be really a volatile period and one won't know what to do because it's priced in the prices right now.
Looking at some data, Sanjay, and this is just data. We'll have to interpret the way we want it. And the data is that 8 out of 10 times in an election year, markets have gone higher. And even if we talk about that single day decline of 2004, when markets fell more than 10% after, NDA lost out during the BJP regime, during the Atal Bihari Vajpayee regime, markets actually closed in the green, the year in the green. So we'll take that conversation slightly, forward, Sanjay, and I'm going to change the topics here completely and talk about the consumer space. At a time when we are generally everyone is of the view that cyclicals will make a comeback and corporate banks should lead the market rally. What happens to consumer names? Where do you think the HULs, the Britannia, the Page Industries and the ITC of the world are headed?
Oh yeah, Nikunj, I shouldn't be sending the wrong message because I'm very clear, and that's why I've actually said I'm long right now, because I clearly believe that the markets are headed much higher irrespective of what happens in that month or two during the election uncertainty, in case we get the other outcome that's, the current government doesn't come to power, which as of now doesn't seem really a possibility. So what you correctly said, that irrespective of election outcome, the event will be out of the way and the markets are headed much higher because economy should pick up. Economy is showing first signs of coming out of, that long phase of contraction, long phase of kind of, slow growth. Interest rate environment is looking benign. So therefore, there's no reason why the consumers would be, robust, consumption would be good. So the consumer stocks would do well. Now, we can obviously debate the earning multiples they trade at. Some of them a lot of people are hiding in them as defensive for the last many months. So therefore, a question would always come, where do I want to buy that, ITC or a Britannia or a Dabur or a Marico or whatever that may be. So I think, once again, for an investor, volatility is your best friend. You get a panic, you want to be in a defensive, you want to be in some kind of evergreen names, these are the places to be. But you got to get your buying levels right, because market's an animal which one doesn't really know the way it goes, and particularly in these kind of environments when the whole forest is kind of clouded and you can't see, you got uncertainties all over. So you have to get a few negative days, and that's the time to come and buy your Britannia and ITCs, because if you have them in the portfolio for 2-3 years, you're going to make huge money and absolutely safe places to be, in the sense you won't have to live with the problems that one sees with banks and one sees with other companies in the sector like steel, cement, etc.
Really appreciate your time and so glad you could join us, and I certainly look forward to much more of you going forward.
Thank you. Thank you for having me. Thank you, Asha.